Welcome back. It's time now to take a look at the top business stories. Sheikh Ahmed bin Zayed Al Maktoum takes over as chairman of Dubai World. Middle East on the brink of becoming world's dominant travel hub. And former Australian Prime Minister, the Honourable Bob Hawke, talks about growing ties between Australia and the Gulf. Asian markets closed mostly higher this Monday as China refrained from raising interest rates. There were mixed results across the GCC markets and the UAE bourses ended lower. The DFM fell nearly 1.5% to close at 1,653 points. MR Properties dropped 2.5%. Arab Tech was down 2%. DU as well as Dubai Islamic Bank lost 1.5% each. 116 million shares were traded, valued at 210 million dirhams. The ADX also fell today. The market was down at 0.75% to close at 2,744 points. Abu Dhabi Commercial Bank lost 2.75%. Aldar Properties continued to fall. The company's shares were down nearly 3.5%. Suru Real Estate was down 1.75%. The energy sector fell today. Dana Gas fell 1.5%, while TAQA dropped 2%. Etisalat was also down 0.5%. 72 million shares were traded, valued at 125 million dirhams. Now, Sheikh Ahmed bin Zayed Al Maktoum, president of Dubai Civil Aviation and chairman of Emirates Group, has been named chairman of Dubai World. This announcement is part of the group's restructuring, where the new board will be responsible for the drawing up the general policy of Dubai World and its subsidiaries, supervising its implementation, as well as studying the company's investments. Sheikh Ahmed has been part of Dubai government's financial restructuring team as chairman of the Supreme Fiscal Committee. He takes over Dubai World from Sultan bin Ahmed bin Sulayman. Now, the Middle East can take advantage of its geographic location to become the world's dominant travel hub in the next 10 years. Technology company Amadeus today launched a report highlighting the investments made in infrastructure and IT, as well as travel and hospitality, that will help propel the industry forward. At the same time, the sector needs to guard itself against complacency and risks posed by a lack of coordinated pan-regional policies in regulation, investment and business operation.
Investment in infrastructure such as airport and or buying new airlines is really by far the biggest in the world. We also have found that there is a lot of low-cost carriers that is being created here, which is opening a lot of new traveler coming to the market. We also think that if we need some more transparency and some more regulation within this area in order to make it more fast growing and more transparent to the world.
For a detailed market analysis, we're now joined by Anil Sachdev, Future Steel at ACM Middle East DMCC. Welcome to the show, Anil.
Thank you for having me.
Now, Asian markets moved up as China refrains from increasing interest rates. Meanwhile, the Eurozone is holding a meeting of finance ministers later this week to discuss forming a permanent crisis fund till 2013. How will these developments affect currencies?
Well, Asian markets were up in the morning after China held off hiking its interest rates over the weekend and raising reserve ratio by 50 basis points on Friday. Now, this news led to the increase in the Asian markets after risk appetite tended to move up. And also, we are expecting China to not raise any interest rates anytime soon. Also, U.S. consumer confidence moved up to a 6-month high at 74.2 levels, thus giving boost to the positive economic growth in the U.S. and making the dollar a little stronger. Chinese inflation also moved up to 5.1%, which was a 28-month high. And despite that, China held off its interest rate hikes, fearing any overseas fund inflow, thus escalating inflation levels in China. Europe markets were also up after the Chinese holding of the interest rates showed that there is possible risk appetite coming into the markets, and we saw that euro was down as there were disagreements over the forming of the permanent crisis fund till 2013, about which the European finance ministers are meeting on December 16-17, with Italy, Belgium, Luxembourg wanting euro area bonds to form part of the fund, while Germany and France oppose it.
Now, there's been mixed news in the commodities markets as gold falls to the $1,380 mark, while oil recovers on Chinese news. What can we expect going forward?
Gold is being seen as an alternative form of currency against the dollar and the other weak currencies by Europe as the European markets moved up. And also we are looking at gold to move up to 1400 levels resistance, with support firmly at 1365 levels. Oil, on the other hand, was moving steadily on the upper side after falling to 87.45 levels on Friday because of the speculation of rate hikes. But after China held the rates, there is demand rising for oil after imports of oil in China rose 26% from the last month, and crude processing also rose to record last month in China. Also, OPEC maintained its production quotas, which is keeping oil prices boosted up, with resistance strongly at 90 levels and support at 86.45 levels. Now, tomorrow we are looking at retail sales data moving up. We have UK inflation report and German ZEW survey data coming up. This could also prop up the commodity markets with news of positive retail sales, and also at inflation remaining high at 3.2%.
Thanks for your inputs, Anil.
Thank you.
On the way after the break, we talked to former Australian Prime Minister, the Honourable Bob Hawke, about trade ties between Australia and the Gulf.